Hello, everyone. Thank you so much for joining me today. It's Thursday, April 20th, and we have a lot to talk about. Happy 420 to those that celebrate. Let's get started right away. First, I want to kick off the video by congratulating the SpaceX team on a successful liftoff of this Starship rocket from SpaceX. Crazy sights this morning. Absolutely insane. I can't believe I'm alive during this time. This thing, one day, could potentially take us all to Mars. So huge congrats to the SpaceX team. But let's move on right away to the topic that I'm sure why you clicked on this video. Tesla reported their Q1 earnings yesterday on Wednesday, and it was not very pretty for Tesla investors, let's say. Down about 10% from yesterday. A lot of reasons why that are being thrown out there. By far the biggest reason that at least I can gather is that Tesla missed on the auto gross margin expectations from most analysts, myself included. I'll kind of share where I expected the quarter to come in and where they actually came in. The guidance that was given was the team guided for about 20%, somewhere above 20% gross margins on auto before or after ZEV credits, rather without ZEV credits and leases, and it came in below. It actually came in significantly lower, somewhere around 18.3 if you back out those two line items. Here's what my expectations looked at versus the actual, just for full transparency. I want to make sure I make sure people watching this kind of see what I expected and what actually came in. So I missed on basically everything on the high side. I was about 4% higher on the revenue, or they came in about 4% lower. Gross profit, they came in about 8% lower. Net income came in about 10% lower, and to net income to stockholders from operations came in at 10% lower, and the bottom line net income number came in about 16% lower. So yeah, pretty significant miss against my expectations. And then on some of the miscellaneous lines, so the auto gross margin, excluding those ZEV credits and the leases, I was expecting 20.1. My dog did as well. And the company actually came in at 18.3. Energy, I was expecting 15.6. The company came in at 11. And operating gross margin, not as big of a miss. My expectation was 12.2, and the company came in at 11.4. And so for me, really the biggest learning lesson here is for the rest of the year, I need to lower the expectations for the rest of the year, which of course is going to impact how I'm thinking about how much money the company is going to be making. But this is an exercise for me. Obviously, you should not make any sort of decisions on my projects. I just want to be very transparent about how I'm thinking about the company, in hopes that it's helpful for somebody out there that says, hey, this is where he screwed up. I want to make sure I don't want to make that mistake. So hopefully that's helpful to you. There's this sort of thing happening here where there's a tale of two Teslas that's occurring that's very reminiscent to me of, say, 2018, 2017, or back in 2014, 2015, when the company was sort of creating a huge foundation, but the expectations weren't really lining up with, say, the execution of the company, or sort of those things aren't happening in the near term. They keep being pushed back out into the future. And so I want to separate this video into sort of the short-term and medium-term type things that I want us to think about, and then the long-term stuff. And then, I'll go through them as best as I can, and then let me know at the end of the video what you think, and definitely share with me your thoughts. And then before we keep going, if you're enjoying those so far, please hit the like button. It helps the YouTube algorithm show this to more people. Thank you so much. I really appreciate you. So, for the rest of the year, I really do think there will be additional margin pressures, especially as Tesla was very transparent about their sort of strategy to maximize volume and not maximize profitability. During the call, they were very open about saying, hey, in a recessionary environment, we're going to go as fast as we can to really raise production. And if that means lowering prices, that's what we're going to do. And so what management is trying to do here is just trying to aim towards 1.8 million units of production, potentially up to 2 million. But their goal is 1.8 million units of production in 2023. And so what Tesla is looking to do, they will continue to lower the price if necessary, which a lot of signs point to this probably being the case for the rest of the year, to reach that target, which of course is going to hit margins unless they're able to reduce their cost by as much as those price decreases. And that's all dependent on what's going on in the supply chain and their cost in raw materials and so on. And the second layer here is that with a slowing economy, which I really think Tesla sort of guided towards multiple times on the call, comments around, we don't have a crystal ball, we are in uncertain economic times, was the type of verbiage Tesla was sharing. Under these conditions, you're also going to have an added pressure where the price decreases will likely become more likely, if that makes any sense. So if people are not buying cars as much as they used to, this will obviously cause Tesla to potentially lower price even further. And so the question becomes, what will the price earnings ratio, essentially what the stock market is going to be willing to price Tesla at with these lower profits from their auto business, especially what will that be like in this environment? Are they going to be priced much more conservatively because of how much stuff they have tied up in, very large manufacturing and how auto is usually priced around these areas? Or are they going to be more like an Amazon where they're sort of given the benefit of the doubt and, growth is going to be the big thing they're going to be priced against instead of maximizing their profits and, being something much closer to, say, a legacy auto or an Apple. So it's going to be very interesting to see what the market will do. I don't want to make any commentary on this because I just don't know. I don't know what the market's going to do. So a lot of the conversation has been around, okay, so under this scenario, does it make sense to advertise? Shouldn't Tesla, instead of continually lowering price, lowering price, why don't they just start advertising to try and bring some customers forward that maybe would have discovered the brand later, or maybe hit a market that perhaps people didn't even know existed? Like, oh my God, I didn't know what a Tesla even was. I didn't know it was this cheap, so on and so forth. I ran a poll on Twitter, which you can follow me there if you'd like, at Farzyness, Farzyness. Should Tesla advertise? I started it about 2 hours ago. Usually these polls, the first 30 minutes to an hour, that's usually how they end up after 24 hours. And it's sort of split. So 34% say yes, 36% say no, and then 20% say don't care, 8% not sure, see results. So there seems to be a lot of momentum starting to build for Tesla to advertise. There was a couple comments related to this advertising thing, especially from a lot of folks that I really value their opinion. They're like, just enough with the price decreases. Get the advertising in place. You don't need to do this. You can let people know that, didn't even know Tesla existed, that they should be buying Tesla because it's clearly the better car. The RAV4 buyer, the Jeep Cherokee buyer, the Honda CR-V buyer, so on and so forth, the BMW 3 Series buyer. And so enough with the price decreases. Try advertising. If that doesn't work, then think of something else. I'm curious to hear your thoughts in the comments section below. Let me know what you think. There's a couple other polls I want to bring your attention to in case this helps you sort of understand this dynamic a little bit better. Another thing that came up is there's an argument out there that folks that own Teslas are quite upset about the latest continued price decreases, which are the things that are hurting margin in the near term, which obviously impacted the Q1 earnings. Please select below the choice that most closely resembles how you feel. About 5,000 people voted. The poll ran for about 24 hours. Not scientific. These are going to be mostly my followers on Twitter. I have almost 70,000 followers, so it is going to be quite a biased sample, but they are going to be very much Tesla fans or Tesla owners. And so 8% said they own a Tesla and they're upset about the latest price decreases. 40% said they own a Tesla and they're not upset about these price decreases, the Tesla being the car, not the stock, just to be very clear. 4% don't own a Tesla and they are upset about the price decreases. And that one is kind of weird, but everybody obviously is more than welcome to their own opinion. And then 46% don't own a Tesla and they're not upset. So by far the biggest piece of the pie here from my followers, my data set, 85% of people roughly are not upset about these latest price decreases. And the next poll I ran, I got about 4,000 votes. If you're someone who doesn't currently own a Tesla car and wants to own one, please select the option that best suits your situation. Please add additional commentary in the replies below. And so this is related directly to the price decreases. And so if you're somebody who's looking to buy a Tesla, 42%, once I can afford it, I will buy it. 23%, I can afford it right now, but I'm waiting. And this is due to, as people were replying, they have a car that they don't want to get rid of and they want to run it to the ground. They're waiting for the Cybertruck, or they're waiting for better economic conditions before committing. That's sort of like the trend that I saw. And about 34% just wanted to see the results, or they already own the Tesla. So I'm curious to see if you find this data helpful at all. Just sort of craft your own thesis and think about this company in a different way. So that's sort of the short term and the medium term type things that I wanted to cover. A lot of people out there are talking a lot about the things that are happening with the stock and the company. So I encourage you to check out everybody. There's a lot of great discussions. So now let's deep dive the long term a little bit and how I'm thinking about the company. Real quick, I do have a Substack, farzadmisbahi.substack.com. Every Wednesday we pull out a newsletter. Link for that in the description below if you'd like to support the channel. Thank you so much. So the big thing that we've started seeing in Q1 is that energy is beginning to ramp from the Tesla sort of energy side of the story. There was about a 17% quarter-over-quarter growth, Q4 versus Q1. And if you sort of annualize this rate and say Q2, Q3, Q4, they do about the same rate, it would be about 87% growth year over year, which is obviously significantly higher than the car business. And it's really good seeing this starting to come to fruition with the Lathrop factory that they have in California, plus the Shanghai factory that they're building in China, which is obviously going to add to this number. So it's very encouraging to see those numbers if you're a Tesla investor. Tesla is aiming for market dominance with auto is another thing that we got very clear exposure to on this call. Tesla was very, very much keen on relaying a message that said our strategy is volume. It's not profit, it's volume, and we're going to use what they call their market advantage because they have a very strong cash balance sheet. Basically, they have a lot of cash in their balance sheet, $23 billion, and essentially no long-term debt. And they have margin they can eat into to sell more cars. So their justification is, well, we have all this room to go, so we're going to do it to sell as many cars as possible. And so that's their strategy. I'd love to hear if you think that's a good strategy or not in the comments. And one of the ways we can sort of test this signal and see if they're actually going for that, if it's actually coming to fruition, the two data sets they shared on the call was that the Model Y was the best-selling car in the EU in the first quarter of 2023. Of any kind, which was obviously a huge achievement. And in the United States, the Model Y is the best-selling non-pickup truck in the first quarter of 2023. And again, these are cars that average about $45,000 to $50,000, maybe a little bit higher in these regions as an electric vehicle, and no advertising. So this to me is a pretty big achievement for Tesla, and this is sort of in line with them saying, hey, we're going for market dominance. So curious to see how the rest of the year is going to pan out in respects to that. Along the lines of lowering price as much as possible and getting volume production up, that ties very closely to Tesla wanting to make a bet on full self-driving coming to fruition. A lot of the verbiage around the call was, well, we are going to be able to sell these cars if we wanted to at almost no margin and basically break even on the business. But then years later, we could turn on a switch and say, hey, these cars can now drive themselves. You can pay for the service, and then the company will start making money on that service at essentially 100% margin, basically pure profit to the company. And some of the things they also said was that Hardware 3, the full self-driving computer and camera system on the existing cars, is going to be able to do this. So theoretically, the existing fleet should be able to do that with their fleet, with their cars. So that's one of the big bets that Tesla's making. Is up to you to decide if you think this is something that you trust management will do, or if you think they need to prove a little bit more. But that's another big bet that Tesla's making. They've been very clear about that being part of their strategy. And then another big thing that was discussed was the Cybertruck deliveries are going to start in the late third quarter. I'm a reservation holder. I can't freaking wait for this car. And this should add margin to Tesla's bottom line, as pickup trucks traditionally are quite high margin products. And from everything we're seeing from the reservations that the company has, there's a huge line of people waiting to get their Cybertrucks, and that should help margins in the long term as well. So from a long-term perspective, Tesla has a lot of, irons in the fire, I guess, as they say. And so if you're a long-term investor, theoretically, these are things that should make you happy. And of course, they shared a picture on the quarterly earnings call. I think this is the very first time that we saw the sort of this exoskeleton thing with the insanely big shock mounts up front. You can see the bed out here and sort of this exoskeleton structure and the front casting. And I don't know what this is. That thing looks gigantic. It's probably storing some air in there or something. But Corey Steuben from Monroe apparently is drooling over this picture, and hopefully I'm going to have him on the channel next week to discuss this in much more detail. Now, if you are a long-term investor, which I am, I've been in the stock since 2012, and I continue to hold quite a significant portion. All my stock is in freaking Tesla. I have real estate as well, but it's a company I've been following very closely for a long time. Elon Musk seems to have a knack for nailing the long term. I remember back in 2014 when they announced Giga Nevada and they were setting out targets for 500,000 units by 2020. They were starting the development of the reusable rocket with Falcon 9. Some of the commentary I heard all the time during that time is 500,000 by 2020, delusional, crazy. That's never been done before. That means they have to grow 50% year over year. That's never been done. Okay, happened. Reusable rockets are impossible, crazy. I remember one of my friends from back in high school was telling me, dude, this is crazy talk. This is never going to happen. This is a fool's errand. He's a scammer, He's crazy for even thinking this is even possible. It's insulting. I think they're going to do 100 or some odd reusable trips this year, maybe more. So, there seems to be a knack in respects to Elon Musk and his teams to really execute in the long term. And so a lot of these long-term things that Tesla's working on and his other ventures, again, I think are going to need that sort of almost faith from the the investing base that Tesla has, the management and the talent and the execution to get there, because a lot of the companies' long-term really valuations from a stock perspective are tied to very, very lofty goals. 20 million cars by 2030, self-driving cars becoming a reality, the Tesla bot, so on and so forth. And somebody like Rob Maurer from Tesla Daily, huge fan of his channel. If you're not following him, what are you doing with your life? Please do. This is the kind of stuff that really gets me jazzed up on days like today, where it's kind of sucks. Tesla doesn't have the greatest earnings report. The call is good, but nothing, to write home about. It's obviously resetting expectations for what's going to happen in the short term. But it's stuff like that I think long-term investors really, really enjoy. But I really do want to hear what you think. This is the perfect time for all of us to sit down from both the bull side and the bear side and every side to really discuss what's going on with the story. What are different ways we can be looking at it? And if you want to see more videos from me, feel free to subscribe by clicking on subscribe right below this video. And if you want to support the channel, I have merch in the description below. And I also have a coupon for Athletic Greens, which is a supplement that I use every single morning. You get free travel packs and free vitamin D if you use my code below. Thank you so much. Thank you so much for watching this video. I hope you had a great 420, and we'll see you on the next one. Take it easy, everybody. Bye-bye.